Loving the Smart Property Investment Show? Then you're going to love tuning in every Monday to the Scouting Australia podcast, hosted by Sam Gordon, Smart Property Investment Show's most downloaded guest.
That always just triggers in my mind. Like I'm always wanting to look after people because of what happened to me there.
What are you waiting for? Listen to the pros at the Scouting Australia podcast, now on all your streaming platforms, and get educated.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, good everyone. How you going? It's Phil Tarrant here. I'm the host of the Smart Property Investment Show. Hope you're well. Talking about mortgages again. It's one of my favourite topics. I don't know any investor who likes a mortgage. It's normally a need to have rather than want to have. That's okay. It's a huge enabler, probably one of the 8th wonders in the world. I think someone said that was supposed to be sort of compounding growth, but I reckon in Australia, there's a couple of other wonders in the world. One of the is the ability to access finance to leverage to be a better property investor. And I'd say one of the other great wonders of the world here in Australia, is pretty unique to Australia, is negative gearing, which is a great enabler for property investors to support the third of Australians who rent properties. Most rental properties in Australia are owned by inverted commas mum and dad property investors, unlike other parts of the world where a lot of it is institutional ownership of large swathes of property, whether they're apartment blocks or suburbs. So relatively unique in Australia in that it's the mum and dad investors who own investment property. They use it as a wealth creation mechanism. They provide that properties to Australians, a third of Australians that rent. And negative gearing is a tax outcome for those people who spend more money owning that property than what it is that it generates in rent. There's a tax deduction connected with that. And also you can deduct the cost of the mortgage connected with it. So if you're not really aware and abreast of this, so I find that when people come to Australia who aren't born in Australia, they sit there and once they understand it, I think of one person in particular, it's a French guy, it was like, what? You can do this sort of thing? And a completely light bulb moment for it. And they changed their whole rhetoric around investing in property and how it can be a true enabler for paving way for a more comfortable retirement. So if you're not aware of all this stuff, go and check out smartpropertyinvestment.com.au. We write about it all the time. When it comes to negative gearing or taxation type stuff, speak to your accountant. There's a lot of good ones out there. I lean on mine to make sure I'm making the right investment decisions. You need to be doing that before you start investing in property rather than after, around tax planning and how it's all going to work, because it's a very important part of the equation. But it comes back to the utility for mortgage. It's key. Property is a game of finance, not a game of real estate. It's a game of finance first. So how best you manage your finances, the better off you'll be. Whether you're able to be liquid in your ability to grow your portfolio or stagnant will be a lot to do with what you buy and how you buy it and the mortgage connected with it. So we've been chatting about the consecutive interest rate rises over the course of nearly 12 months. We are now in a period of pause for April when you're tuning into this particular podcast, whether or not interest rates will continue to go up. I think that the catch-all and to aggregate the views of most economists, they're all a bit different. They're saying that we're either at the terminal interest rate or we're very close to it. So I think property investors can start moving with a lot more confidence around mortgage rates. If you haven't reviewed your mortgages for many years, even for the last year since rates started going up, I reckon there's probably a good chance you can save a few bucks on your mortgage through refinancing or working with your lender to change it up. So speak to your mortgage broker, get them onto it ASAP, because that will be a very important way to ameliorate any constraints on your cash flow as a result of this rising rate. So you've got to be active. You've got to be conscious about it. You've got to be moving quickly. Your mortgage broker at the moment is probably one of the most key people as part of your team as a property investor. I myself use the guys and girls over at Finni Mortgages, finni.com.au. They do my mortgages. They're working on a whole bunch of stuff right now. I lean on them to ensure I've got the right mortgages at any point in time to support my buying and investing decision making, but I also get them onto this podcast to give us an inside view on what's happening, what they're seeing, and how we can share some of their skills and capabilities when it comes to helping you make more informed decisions. Joining me in the studio, I've got back a senior broker from Finni Mortgages, Eva Loisance, regular guest on the Smart Property Investment Show. She either comes in solo, she brings along a colleague, and today she has done that. Rebecca Carlson joins us, one of the brokers at Finni Mortgages. Rebecca does a lot of my stuff personally, so I know her, and she knows what it's like to deal with a hard-to-work client like myself. How you going? Well,
Yeah, good. Thank you
all
for
good.
having me.
Eva, hey, how are you? You well?
Yeah, good. Thank you. Thanks for having us again. Yeah, really looking forward to this one because Meg's got a lot of inside information on this topic we're going to touch on. So yeah, really keen to hear.
Well, I think the origin of mortgage brokers in many ways was helping people who probably didn't meet the vanilla views of banks 20, 30 years ago. Mortgage broking, a lot of it originated out of the legal firms who were looking for a different way to support clients who didn't really fit the way in which lenders saw the world, and largely they were self-employed people. So for those people who are self-employed, mortgage brokers continue to be a huge enabler for getting them into finance, because it is a little bit more difficult to secure finance as a self-employed person, even if you're the most successful self-employed person out there. Just the way in which lenders view you, need information from you, is very different than someone who is as a PAYG. So, we'll just quickly cover those things too. A PAYG means that you get a regular salary from an employer that withholds tax from that. You're 100% an employee, and that typically makes borrowing a little bit easier. If you're self-employed, it means that you manufacture your own money and you are accountable and responsible for all the financial compliance around it, including how you pay the tax office. So the way that you borrow money is typically based on the health of your ability to generate income inside your business and personally. And that sort of makes things more complicated, but it doesn't make things impossible. No doubt, Rebecca, within Finni, a lot of your clients are small to medium business people, of which, to give our listener, I'm probably going to butcher these numbers a little bit because I'm a little bit disconnected with it, but there's probably about 2.6 million businesses in Australia by memory. I'm probably going to get this wrong, so I apologize. So go and Google it. I think there's about 3,500 large businesses. That's companies with more than 200 employees. I think by memory, there's about between 50 and 60,000 medium-sized businesses. So that's typically businesses between 20 and 200 people. And then everything else is a small business. There's like 2 million small businesses in Australia. So small and micro businesses. So these are very small operations or individual operations. And often, Rebecca, that they're the people who struggle most with securing finance because their business finance is often intrinsically connected with their personal finances.
Yes, that's definitely correct.
Yeah, so I apologise I've got those numbers wrong, but it's thereabouts what it is. But this is the lifeblood of Australian economy. Small to medium businesses, by memory, employ 70-something% of all Australians. So they're really connected with the rice bowl of all employees in Australia as well, because more than less Australians are employed by SMEs rather than large organisations. So they have a very important role to play. They've struggled through the COVID period. Some of them have thrived. And I know the government tries to do a lot to help small to medium enterprises in Australia, but we're here to talk about getting a home loan or getting an investment loan if you are a small to medium self-employed type person. Tradies, butchers, bakers, auto repair shops, anything you can imagine, there's a small to medium business connected in it. Rebecca, do you enjoy working with business owners? Or, I guess I'm sort of one of them, so I'm hard work, but decisive when they need to be.
Yeah, look, I think self-employed business owners, they have to do a lot of their own research to keep their businesses thriving from a compliance and an operating point of view. So they're good people to talk to. They are very passionate about what they do, and they essentially know a lot more about their financial structure than they think they do. So yes, definitely enjoy working with self-employed. It's sometimes a challenge. So I do have people that come down from a sole trader up into complex self-employed, but everyone has their own different challenges, and it's good finding a solution for all of those clients.
Just to talk generally quickly, is it harder to get a loan if you're self-employed?
I want to say yes and no. To be honest, there's sometimes more options for self-employed. Whether or not they're the most attractive options is up to the individual, but from a solution point of view, we've got a lot of different avenues of looking at income. With businesses, historically, banks want to look at income over the last couple of years. There's options to look at it from that point of view. There's options to look at it based on current income levels. So there's sort of a few differences that allow us different choices for different clients.
Yeah, and often if you're a self-employed, you might end up in a different part of the bank as well, particularly depending on your earning potential and capacity. You might end up within a private bank inside of a organisation. We spoke last time we got together, Eva, with Sarah around sort of private banking and the pros and cons of that. But a lot of self-employed people lament on their ability to secure finance. And one of the challenges around that is banks are happy to lend money to people if they're deemed to be a good borrower. One of the challenges, and you speak to a lot of accountants, I say this, a lot of self-employed people trying to minimise the amount of tax they have to pay. And therefore that sort of changes and shapes their earnings, which makes it very difficult sometimes to secure finance. So when they sit in front of a bank and they go, oh, I really make all this money. And they go, well, your tax return doesn't say that, Mr. or Mrs. SME, so no finance for you. So often you need to strike as a self-employed person a balance between statutory reporting around the performance of your organisation and how you generate money. And guess what? And it's a reality of working in Australia today. If you have a successful business, you pay tax, get used to it. It's a good thing. It helps support the nation. If you try and minimise that as a self-employed person, that's your prerogative. However, you're probably going to struggle getting finance. And that's the realities of it. The issue you have is you must see this, Rebecca, a lot of accountants work really hard from a taxation planning structure for small businesses, but they don't, or small to medium businesses, but they don't necessarily view how they're supporting their clients with a view towards financing. And often there's a big dichotomy. Do you see that quite a lot?
Yeah, I do. I do also see some very clever accountants who essentially structure things so the banks still take a lot of income into equation, but it's still allowable as a tax deduction. So that could be things from depreciation, one-off tax write-offs, things that the banks will actually use. Yeah.
Yeah. I guess, right. Do you see that quite a lot, Eva, with your self-employed clients? It just gets a lot more complex, doesn't it, in terms of how
it does. And as Rebecca said, I think if you are self-employed and looking to get a portfolio and finance, it really is good to get an accountant that understands finance so they can structure all the deduction that makes you pay less tax in a way that we can actually add that back and get you finance. And it's not the majority of accountants that could do that, I'd say, or that can work in that, with that in the back of their mind. So it's very important that, I guess people understand that and get the right team. Again, it's always about the team that you've got around you, the right team, to set you up for success.
Yeah, I completely agree with you. And if you're a property investor and you're self-employed, you might be, irrespective of what you do, but you might not yet be investing in property and you've had a particular taxation strategy. If you're thinking about investing in property, I'd be speaking to your accountant first and foremost before you even start thinking about chatting with a mortgage broker about how you can prepare your finances to best support borrowing moving forward. And that may be a different strategy. I'm not giving tax advice at all because I'm not a taxation person. I'm not an accountant. I'm just a journalist on a podcast. But my recommendation would be working very, very closely with your accountant to prepare yourself. And it may take a couple of years to do this, to prepare yourself for investing in property. Once you've got that plan in place with your accountant, you understand how you're able to present strong financials to a bank so they have happiness and willingness to lend you money. You can start the pathway of looking at getting pre-approvals and that sort of stuff. If you currently are a property investor, again, your accountant is absolutely critical and they should be working hand in glove like mine does with the team over at Finni in ensuring that I can get the best financial outcomes that I want. If you're new to this, get used to it because it's probably going to be quite painful sometimes. It's going to take a lot of time, energy, and effort. And you need to invest in that in order to get the outcomes that you want. So if you're not willing to do that, don't invest in property. Turn off this podcast right now and get on with it. If you've got to be intrinsically connected with your finances in order to be an effective property investor, if you are self-employed, or if you're not, learn about it. And if you don't have the aptitude for it, get the right people around you. A good accountant, fundamentally, a good mortgage broker, absolutely, and then other connected people in with it. You might want to get yourself a financial planner or a buyer's agent, all that sort of stuff. But there's a lot of misconceptions, though, I think, around self-employed borrowing in Australia. And if I think back the last sort of 20 plus years in mortgages, there was a big thrust many, many years ago around non-conforming lending. So what that was, Rebecca, and you could probably speak to it a little bit more, is the bank didn't require as much information in order to give you a home loan. Sometimes they were just happy to get a letter from your accountant saying, this guy is good, lend him some money. And they go, okay, here you go. It was deemed, therefore, to be a lot more risky and therefore interest rates were a lot higher. So all of this stuff is still available to Australians out there. Is non-conforming still quite popular, Rebecca?
Yes, I've got a lot of clients that use non-conforming for different reasons. Just for an example, I had a client recently who his 22 financials aren't showing the full strength of his business at a current point. We're looking at alternative lenders using BAS statements to demonstrate the 2023 income. So it's a means to an end. That client, for example, 6-12 months' time, we can look at moving him back into a major lender, but for now, he can do what he wants while taking advantage of the alternative lenders. So we do still see that a lot, but they do seem to be more a means to an end.
Yeah, and I do think alternative lenders are a much nicer term than non-conforming. I think non-conforming is quite a negative term, and to give everyone a sense, if you are self-employed, you typically have prime lending, which means it's normal. You go through a normal process of providing all the information that they need, often quite painful, but worthwhile doing. You have near prime, which is you're nearly one of those people, but you're not quite. You have subprime, which means you're probably a little bit less than that near prime person. And then you have non-conforming. And non-conforming is typically someone who is pretty far away from being a prime client. And that's a really basic scaffold for you to think about where you are as a self-employed borrower. You want to be moving up as close as possible or into prime lending if you can. And that just means it's a lot more onerous, the amount of work you need to go into it, but the time, energy and effort to present the right financials to the bank. What does that mean, Rebecca? It means probably a sharper interest rate, right?
Definitely.
Well, what's sort of the spread on interest rates for self-employed now for investment finance, say at P&I levels? What would be the spread between prime? And this is the question is the juice worth a squeeze? Is it worth the time, energy and effort to be a prime lender to be a prime borrower, self-employed versus operating in non-conforming? What would be the percentage point difference?
Yeah, look, it really depends on the client's situation, but it could be anywhere. The alternate lenders do base things a lot on loan-to-value ratio. So if you're at the higher end, if you're at the 80% mark, we could be looking at least 1% difference. Some lenders have risk fees associated with that, which come on top, where others, if it is at a lower LVR, we don't see that much of a gap between the mainstream and the alternate lenders, probably something closer to 0.5%.
Well, what are the sort of pros and cons with using an alternative or an alternate lender? And by that, let's sort of name a couple of them, which I'd be familiar with, probably folks like Pepper or Bluestone or some of the mortgage managers. Bluestone's still going, how much they are. Maybe that's sort of showing my age.
No, they're still around.
Liberty does a lot of sort of near prime, subprime, non-conforming stuff. That's where essentially they cut their teeth is in that non-conforming area. So largely there is a difference in the interest rate you pay, but for many people it's enable. It means that they can get into the market faster. And that's a huge boon strategically for a lot of people, isn't it?
Yeah, so I think people really have to weigh up the opportunity cost. So, I mean, in the investor market, if you're looking at something that you think is going to have great capital growth, great yields, does that outweigh paying the additional interest rate for the short term?
Yeah, and for a lot of people, they'll just use a near or alternative or a subprime lender or a non-conforming lender for a period of time until they get to a point where their financial situation supports moving into more mainstream lenders. How much difference, can you give us a sense, Rebecca, how much difference is the sort of document requirements for prime lending or mainstream lending versus non-conforming? Is it a substantial difference?
It's not, paperwork-wise, not particularly substantial. It's just about the actual documents. So, for example, if we're doing something with an alternate lender, we might use BAS statements or an accountant's declaration, things like that. Where we're going into the prime lending space, we're going to need full tax returns. So realistically, your accountant should be preparing those and finalising them before the appropriate cut-off. So sometimes it's just a timing issue. Once you've had your ABN for a certain amount of time, moving that across to you'll already have tax returns available.
So in terms of some of the misconceptions for self-employed lenders, there is a simpler way, right? It's just that you can do it simply. You just got to use different lenders.
Yeah. So, I mean, I had a client last year in the prime space. His tax returns were heavily impacted during the COVID period. We were able to go with a mainstream lender who verified company salaries. So that was just direct salary credits. Also, the group certificates declared through the ATO, and we were able to move forward very little documentation, but still in the prime space.
There's also a misconception that you have to be in business for 2 years trading profitably before a lender will issue finance to someone self-employed.
Yes, that is one that I see a lot. I see a lot of people say, I've got to wait. No, you don't.
So how do you not have to wait? You just, like you spoke about beforehand, you can actually use current financial year BAS statements as an indicator of positive trading performance, right?
Yeah. So, I mean, look, it's documentation that's submitted through the ATO. It's clear reporting on what your actual business is doing. So lenders at a higher interest rate, of course, but they are happy to accept that.
What else do you see, Eva, for misconceptions around self-employed lending or misinformation around it?
Yeah, so the 2 years is definitely the biggest one we see, and we see a lot of clients coming to us for second opinion, I guess, and saying, look, I've been told this, is it true? As Beck said, no, we can still do things. On the same sort of note, people that go from sole trader to a company because they're growing, they feel like, well, I'm starting again, so I have to wait another 2 years. If we can show it's just your company that has been growing and you decided to go as a PTY LTD, there is continuity there in 2 years, sometimes more, there's no issue. And also a lot of people on that again think, well, maybe they will only take the average of the last 2 years or the latest year or the lowest year. There's a lot of ways the bank will look at that. Some of them will do the average. Some of them will take the lower. Some of them will take 120% of the lowest year. There's a lot of ways. So it's always good, I think, to get broker that will understand self-employed and can work out a solution based on your very specific numbers.
It gets quite expensive when you think of the complexity of self-employed lending. It's not only how you present income, but it's the structure in which you create that income in. You spoke there, Eva, around moving from a sole trader into a company, and you got to be getting tax advice on this stuff because, for example, once you move into a company, you just can't pull money out and use it as you like, as you potentially could do or can do inside of a self-employed type of arrangement. So it gets very complicated in how you can highlight income so you can secure financing. You'd be getting your accountant onto that really quick. If you're going to start thinking that way, you'd also be thinking about the structure in which you invest in as well. There is certain risks in being self-employed and running a business. So therefore it might change the way in which you choose to hold the assets as a property investor, whether you have it in your personal name, depending on the risk profile of your business or how you generate income, whether or not they'd be better off in trust structures, all this sort of stuff. Again, as questions for accountants. But do you find, Rebecca, that self-employed investors are more complicated in their sort of how they choose to hold their assets? Then you must see a lot more trusts.
Yes, no, I definitely see a lot more trust in the self-employed section. So I also see a lot of people wanting to look at their premises as part of their business. So
I like buying their place they operate in.
Yeah, so I see a lot of clients, if they've got a premise and they've got an accountant, again, I'm not giving tax advice, but setting up to purchase premises through commercial self-managed superannuation funds.
Yeah, you see that a lot. Let's just chat about that quickly. We'll just go to a quick break. Stay with us, everyone. Back in a moment.
This year might just be the right year to invest in property. But before you jump in, do you have a low-rate investment loan pre-approved? It might be the right time to invest, but the wrong loan could dent your prospects for achieving the maximum return. Are you armed with the best finance at the sharpest rate? Find out with Finni. Call us now on 1300 002 023 and find out what you could save. Or visit our website, finni.com.au to book an appointment.
Welcome back, everyone. It's Phil Taran here. I'm chatting with the crew over at Finni Mortgages, Eva, Loisance, and also Rebecca Carlson. Now, you see a lot of self-employed people buying the assets that they operate within, probably a lot of like industrial units and warehouses and that sort of stuff. Rebecca, is that typical? Normally originated through recommendations from their accountant?
Yeah, look, I do see that. I see it for a few different reasons. So they obviously rent the premises off themselves. It's just another tax structure essentially to assist them with growing their wealth.
Does that get harder again? Is that another layer of complexity with mortgage finance around that?
If we're not looking at the commercial, like if we're not trying to finance the commercial premises, not necessarily. It can be quite clean cut. The accountants normally can explain the revenue structure, which is quite acceptable by the banks.
Yeah. And any other sort of significant challenges you see from self-employed borrowers that can be remedied largely quickly? And I think about PAYG borrowers trying to secure finance. The banks sort of pick through your sort of bank statements with a fine-tooth comb to understand sort of your spending profile. They do the same at a personal level for self-employed people?
Yeah, so there's still responsible lending. So there is still a need to go through your personal spending. They're not going to get involved in the business spending as long as there's company profit and the business is trading at a profit.
Okay, so if you're trading profitably, they don't dig into that part of, the financial component of it, but they'll look at you personally and say, well, you're still spending more money than what you're making from however you're deriving out of the business. Too many Uber Eats bills, too much sort of asset finance. They still do all that sort of stuff for self-employed, or probably more so?
Yes, so definitely they do have to look at their household expenses just to meet responsible lending requirements.
And that just comes to baseline fundamentals, just spend well.
Yes. So be mindful about what you're spending. Don't be flippant. If you're looking at getting additional finance, you think your spending is out of control, rein it in, get things under control, get a couple of months' worth of what your actual budget is so we can evidence it to the banks.
Can you give me a sense for how, maybe some examples on how different lenders sort of verify income or view business expenses? Is there any sort of baseline models they use for this sort of stuff?
For business expenses?
Yeah.
Yeah, look, they would just look at really the net profit. If your business has managed itself that, everything can be covered and still make a profit, that's what they're going to use, the profit really. Some of them will actually ignore the leases and loans you may have in the business if you still have a profit. Some might actually do a bit of as we call it in the industry, double dipping and add that back as well. So we try to avoid going there. But technically, once you've got a profit in the business, the expenses within the business are not actually really looked at.
And then they just assume if you have profit in the business, they allocate that profit as part of the serviceability of the borrower. So even if they might receive regular payments, and a lot of business owners still receive PAYG payments, right? Like that's how a lot of people still structure stuff, or they take it as fees from the business, and then they might be overlaid with business profits. That's all sort of considered our aggregate level of your serviceability.
Yeah. So typically you'd have your director fee, your PAYG income if you pay yourself a salary, the net profit of the business, and then as Rebecca mentioned early on, if the accountant has been a bit creative there, we can add back depreciation, we can add back some interest you've paid, we can add back some one-off, sometimes super you paid yourself. So it's a bit we can add back as well, that, and all of that will make the income we can use for servicing checks.
And we've got a range of people either that listen to this podcast who invest in property. A lot of them are professionals. And what I understand, different professionals are viewed differently in the eyes of lenders. And I think there was only a report out this week around there was trust in different professions. Real estate agents and media salespeople were pretty low on it. I don't know where podcasters were on it, but those people who are deemed to be the most trustworthy from a professional point of view are like, doctors and dentists and high court judges, and there's this perception around trust with them. Even like people with professional services like accountants, for example. So there's certain lenders that just target professions, correct, who they think are really, really good, and they get preferential lending environments. And by that, most doctors are self-employed, right? Well, a lot of consulting doctors are self-employed. They run their own businesses. So they're considered to be self-employed, but they get it a bit easier than us podcasters.
Well, technically, the bank would still look at the tax return the same way, right? That's no discrimination there. As we discussed in previous podcasts, they might get no LMI and they might get a private banker a bit quicker than others. But technically, the tax return will be looked at the same way. So
the only way that you're going to know whether or not you get preferential rates if you're self-employed in particular areas is by going to a mortgage broker. They're going to know, they're going to have visibility. What sort of lenders target what particular professions? Because I know they have niches.
I don't know if there's any targets in that sense for professionals like that. Obviously, you might get LMI waiver, and you might get a bit of, it's always like the reputation of and the trust we put in this profession. But I don't know, Beck, do you think there is anything specific there?
No, I do see more of a preference from the professions. So I do, and whether the lenders are seeking them out, and this is just something that's historically happened in the past, but I see a lot of doctors going through, like, for example, Bank of Queensland. We see a lot of lawyers dealing with Commonwealth Bank. I don't think they get any preferential treatment from either of them, but we do see a large client, like a large profession base that like to deal with those types of lenders for whatever reason.
Yeah, you see it like it's not deliberate. You just get leaning of it, and different professions talk to people, and if they understand how they manufacture their money, sometimes it make the actual process of securing a mortgage a little bit easier. I just want to talk about the dichotomy between using a bank direct or a broker. We'll just go to one more break. Stay with us, everyone. Back in a moment. Welcome back. It's Phil Taran chatting with Eva and Rebecca over at Finni Mortgages, finni.com.au, around self-employed lending. Now, you can go directly to a bank if you want, if you are self-employed. What would be the positives and negatives of doing that, Eva?
Well, I guess you could. That's right. So you go to, let's say, Bank A, and there's one solution there for self-employed. If you don't meet that solution, that's it. Your appointment was just, I guess, a waste of time. If you go to a broker, we'll have, let's say 20 different options for you to see if one of them fits. So I guess, first of all, you won't waste your time, and two, you will have a solution at the end of it. And if it's not a solution that works right now, at least we could guide you towards what it will look like, in the next 3 to 6 months, so it will work for you then.
So if you go, how many clients do you guys get that say, I went to my bank and they said I couldn't borrow it because of this, that, and the other, and I'm self-employed? That must be a catalyst for why someone actually goes, I need to speak to a mortgage broker if they're self-employed, Rebecca.
Yeah, so look, I definitely see that a lot. I see clients that have gone to their bank being told they can't borrow. I unfortunately think that there's a lot of issues with skill. So if they're going across to the bank, they're either presenting the absolute bare minimum of their income. No one's looking into it further to see what's actually in their financials. It goes across to the banks and they go, well, it doesn't work off that, and no, you can't do it, where it's sort of our job. And one of the things that we do really well as brokers to make sure that we understand the financial situation. So if you don't have someone who's really pulling apart those figures and presenting it to the bank, then it's not always going to look as great as it can do. And
again, I see brokers and accountants working really well in lockstep, being able to present. And a lot of work goes into it, present the earning capacity of self-employed borrowers, because on first look, unless you're skilled, and I'm not here to beat up banks, but if you're a PAYG sort of first-home buyers, two people with not a lot of debt and a lot of expenses, the direct bank process should be relatively straightforward. Whether or not they have skills to pick through complicated financials and actually understand how someone might generate their income, the broker's probably best person to do that for you, working with your accountant. And it's okay. You guys work closely with accountants, right? Like as a team to present this stuff up effectively, Eva?
Yeah, all the time. Pretty much when we do have a self-employed person as a client, we do need to chat to the accountant just to make sure we haven't forgot anything. We understand the cash flow. Obviously, if it's a sole trader, it's a lot easier, but most of our clients would have sometimes few companies and it's flowing in different ways. So, and then sometimes the accountant might be able to do something differently for the next tax return, which will open doors for the client. So it's essential that your broker and your accountant chat to each other.
Yeah, and what a good borrower should do is just go, hey, here's my account, you guys work it out. Is that what you like doing?
We will work it out. No, yeah, it's true. No, there is ways to make things look better and paint a bit better picture. So, yes.
Yeah. So just to conclude then, Rebecca, if you are self-employed and you're trying to get your first investment property loan or even refinance your owner-occupied loan, what's the best first step to do?
Yeah, so look, I would definitely touch base with your accountant, make sure that you've got all your financials up to date, let them know that you're going to be speaking to a broker, then obviously engage a broker. We can exchange information, we can work on solutions. Yeah, so I think that would be the best point of view as a starting point.
Okay, nice one. You guys are happy to chat to self-employed borrowers who need some help, Eva? What do they do? How do they contact you guys?
Yeah, so you can get in touch through our website, finni.com.au. You can just plug in your details. We'll be in touch with you to book an appointment.
Okay, there you go.
Mm-hmm.
Finni.com.au. Go and check these guys out, Eva and Rebecca from Finni Mortgages. Thanks for your time today. Very informative. Thank you. Heaps of information on smartpropertyinvestment.com. Go and check it out if you want to look at how you can not only amplify your ability as a current investor, but also get into investment lending if you are self-employed. If you hear no, ask a second opinion. And particularly if you go directly to the bank, and you should be going to your mortgage broker. Heaps of info there. Heaps of connecting social media, Smart Property HQ. And please keep the reviews coming on wherever you listen to your podcast. The team get a real kick out of seeing that feedback coming from you all. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you looking for a new challenge that combines your existing skills with the exciting world of mortgage broking? Well, listen up, because we've got the perfect opportunity for you. Introducing the Advisors New Broker Academy 2023, a free event designed for professionals just like you who want to learn how to become a trusted broker for their clients. Coming to Brisbane, Melbourne and Sydney in June, you'll learn from industry specialists and gain crucial industry insights and intelligence to become a go-to broker. You'll also have the opportunity to network with brokers at all levels and gain a competitive edge in the marketplace. Register now for free at newbrokeracademy.com.au and join the top brokers of tomorrow.